So Stats SA releases unemployment, or rather employment figures tomorrow for the second quarter. Now, these employment figures are expected to paint a bleak picture. It comes as PwC warned of weak investment levels. PwC economist Christie Viljoen joins me now to talk about that. Christie, thanks indeed for your time. So we've got the numbers coming out tomorrow from Stats SA, which is essentially a look at the formal economy or jobs in that regard, very different from your unemployment figures. But presumably they will tell a similar story. Nothing has changed to produce a turnaround, you tell me.
Quite correct. I'm not very enthusiastic about this data coming out, to be honest. We've already seen a taste of some of these numbers in the quarterly labor force survey, and in the analysis that we published last week, we looked at some of these indicators. And in terms of formal jobs, it's certainly not good news. In the first half of this year, South Africa lost almost 300,000 formal jobs, and most of those people moved over into the informal sector. So it already tells us that the report coming out soon is not going to be very encouraging, and that raises many alarm bells. We're seeing this economy recovering, but it seems almost like a jobless recovery in 2021 so far.
And I guess tomorrow's numbers are particularly important, although it might paint a sort of a historic picture because we are dealing with the second 3 months of the year. But it really tells us from a business perspective whether or not corporates are absorbing or creating these jobs, unlike the unemployment survey, which is a sample of households. But let's get back to these businesses. I would argue that they are still too apprehensive to expand. So our investment to GDP, for example, what is it, sitting at 14%? It should be above 25% to GDP. Is that the reason why we simply cannot create jobs in the economy?
Well, before COVID-19, we already had a challenge in creating jobs. It's always been not enough. We've always had a high unemployment rate. And then obviously last year we lost a net 1.4 million jobs due to the lockdown, due to the recession, etc. So for us, it's a big concern that the economy is not creating jobs. And yes, investment is very low, and that's part of the problem. Investment is low, employment creation is low. And we think of it from a business perspective. Like you said, the data coming out tomorrow, it's from the business side of things. It basically tells us that South African businesses are not creating or even retaining the jobs that we were hoping they would. And it comes down to, it's not a simple answer, but it's business confidence. It is the confidence in where the economy is going to be in 2, 3, 5 years from now. And if we think of some of the key uncertainties that businesses face right now, we know expropriation without compensation. It's still up in the air. Where there's uncertainty about personal income tax to fund a basic income grant. We don't know how reliable electricity supply is, even after we've had 3 months of no load shedding. So there's so many uncertainties currently facing businesses, big and small, that there's just no knowing where the economy will be next year or 3 years from now or 5 years. And those are the kinds of horizons that businesses look at. They need to be sure, or at least have a good idea of what the business environment will look like in a few years from now. And right now, we really can't say what it's going to look like. That makes them apprehensive. You can't employ someone new when you don't know if you actually have a job for them next year.
Indeed. It will be interesting to see what the numbers tell us. But before I let you go, Christie, another big issue that's been coming out from last week was the consumer inflation figures. Now, inflation a little higher than what it used to be. We're told that it could sort of ease as we go into the end of the year, not really rise further. But there's one component in there, food inflation. It's now sitting at 7%. I mean, that's what hits consumers directly, doesn't it? Forget about the drought in investment. When food prices go up, that's the thing that hits the consumer. Where is this going? I look at meat prices, they're well above the standard inflation rate. So too are fruit and veg. Would there be some reprieve coming up in the latter part of the year, or are we stuck with high food prices for a while?
Now, certainly there will be a little bit of relief towards the year end if we look at these kind of inflation numbers. But the bottom line is, as you said, food inflation rising by more than, let's call it, the average inflation rate. Now, historically, we've seen that many times. Food inflation is quite volatile, but that does not take away from the fact that, yes, this is hitting the poorest people the hardest. And we think of all those jobs that were lost last year, people that had formal good, well-paying jobs that now are unemployed, dependent on different kinds of grants and transfers. Those are the people hardest hit. And it is the basic food items, the food, the grains that we know. Internationally, meat and grain prices up about 10% this year so far, if you think of it in US dollar terms, which is similar to the rand terms. So yes, it's going to be elevated for quite some time. And the problem is there's so little that these kinds of consumers can do about it. They are already spending on staples so that they cannot, because they cannot afford other luxury items.
Okay,
so
I'm going to have
a
to
little bit
leave
of
it there,
good news,
Christie.
hopefully.
Indeed, sorry to cut you off there. We're running out of time, but indeed, the point being made. Thanks very much indeed for your time. Christie Viljoen is an economist, the chief economist at PwC.